Well, welcome. I know everyone's been waiting with great anticipation for this panel. I could honestly say I know these gentlemen, the majority of them, for over 30 years. I know a minimum of 25 years, and I'm still in awe that I have this opportunity to actually be in this position to talk with them. We have a large percentage, a very large percentage, of the institutional real estate ownership of this great city sitting in front of you. I don't know another conference that had this many of them in one place. The difference between this year and last year, we've done this for a bunch of years together, right, is that I'm going to interrupt you. If one of you speak too long, I'm going to shut you up. Because the reason is I want to get as much on the table as quickly as possible so we all benefit by the genius that's in front of us. And especially in these times where we're all so challenged. And I think if the Wall Street folks that are now demonstrating downtown knew this panel was here, they would be blocking the doors outside. So we sort of did this in a stealthy way. So my first question is, what issues do you guys see that are most vital to retaining New York City's competitiveness? And there are a bunch of things that we could really talk about to do that could prevent it. And we won't be the golden apple anymore, we'll be the tarnished apple. Things like mass transit capacity you could address, a better experience, going to the airports, better highway transit, the fact that when we turn on our air conditioners, they work with electricity, and accommodating future population growth. I think following this question, we'll address some issues regarding the union, which we'll do separately, and others. But let's start with Mike. I mean, how do we keep the golden apple from becoming the tarnished, if not the rotten apple?
I think one thing would be
If you could just speak in your microphone, that'd be great.
One thing would be continued business-friendly and competent administrations. I mean, we've been, I think, blessed in New York with the last two mayors who have been quite effective. And if you own a lot of stuff in New York, I think that's one thing. Just the attitude, the business friendliness, the competence in which they, I think, run New York, the cleanliness of it, we know it's a high-cost city, but it's a place that people want to come to, want to live, and want to be in, and want to work in, and that's a huge, huge advantage.
We'll pass it. That was quick. It was good. I mean, there's a lot of different things that you hit, Rob. I just think the ability to spend the city and the state's money wisely so you're creating taxable, ratable increase in taxable base. I'm not sure that's what's happening, and I think ultimately all the things we want in the city to happen, we want services, we want security, we want parks, we want infrastructure, we want new buildings, that happens when we're growing. And I don't, right now I see a lot of projects that are going on, a lot of transportation projects, other projects, money being spent, but I don't see a focus on growth. And while we do have a market that's slowly recovering, you don't see a lot of expansion, you don't see a lot of new firms coming into the city. And I think that eventually the topic on the table of upzoning certain areas, particularly around the areas where there is being tremendous amounts of money spent to bring people either into the city or from other parts of the city to the transportation hubs, have to be connected eventually with an upzoning that'll make construction feasible given today's rents and today's costs. Without subsidy today, it's not very feasible. I think that eventually, if that happens, that will be a return on all the investments for the East Side Access Project and the downtown transportation hub and the improvements to the 2nd Avenue subway, 7th Avenue, the 7 line. It's all great, but eventually we need to build new product and increase the taxes, not by increasing taxes on existing, but by taxing increase in value, and then we can reinvest that in the city.
Bill?
Well, I think Mike said it. You need an enlightened administration. You need an administration that's going to promote jobs. You need an administration that is going to promote an atmosphere where people want to live in New York and stay in New York. And you have to promote an atmosphere where you have a stable perception of taxes and where you're going to have the creation of the kind of jobs that are going to be in the 21st century. We're kind of not looking at financial growth, but you've got to promote the kind of health care, the kind of education. Education is key here. We have an undereducated population. We've got to promote education. We've got to promote health care. We've got to promote technology. We've got to promote publishing and communication. That's the areas for growth. The government itself, if you have an enlightened government and you keep the crime down, and you keep the streets clean, and you keep a favorable tax atmosphere, you're going to be able to keep this golden apple golden.
Steve?
I mean, I think a lot has been said that you absolutely agree with. That's the only way you can have a great city. But in New York has probably done better than any city in the United States at this point in time in what we're doing. But I think that, we take a lot for granted today, and it's not so sure that some of these things that were said and what needs to be done can continue to happen. And I think that, you look at our politics, you look at our cost structures, we have to be competitive no matter what with not only the rest of the United States, but also the world, for New York to really achieve the opportunity that's available out there, and for all of us to want to continue to live here and grow. And it obviously, as it's been said, it starts with the politics, and there's a lot of things out there that are today that are somewhat have a lot of problems that potentially exist. You can see it today with Occupy Wall Street and some of the measures that the Bronx Borough president has done with his legislation that no job is better than a low-paying job and things like that. But right now I think the opportunity is there. It's for us to continue the growth and what's been achieved in the past.
I was at a panel. I wasn't on the panel. I was an observer. The mayor was involved in with Thomas Friedman as the moderator and the former mayor of Toronto, and it was a discussion about immigration reform and its impact on our economy. And I think we have to build on the city as a city of immigrants. We attract people from all over the world, but due to our existing laws, we make it very, very difficult for the young people who go to NYU, go to their business school, and then we send them right back if they're foreigners because they can't get a visa, and it's insanity. And I think Tom Friedman described as we should have a big fence, a tall fence around our country, but with a wide gate, and that's going to help us deal with the issues that were talked about before in terms of attracting the technology companies and the media companies and healthcare and all the growth industries, because we are a global society, and the people and the businesses are going to migrate where they can find the best and the brightest, and that's what we have to continue to build on.
I feel like Elizabeth Taylor's 8th husband on their wedding night. I know what I got to do, but how do I make it sound interesting? So I applaud everything everybody's just said. They've said it all. I think, however, we happen to be in a pretty damn good place. Yes, all the things were referenced, good ideas, and important to follow through on. But the truth of the matter is, no matter where you go in the world, you ask the leaders, the people who run these sovereign funds in different parts of the globe, and when you ask them, where do you want to put your money? They all say, America is the place I want to invest. And then they say, okay, so which city in America? And they all say, New York City. And they said, well, is there a number two? And they said, well, maybe Washington. But essentially, we want to put our money in New York. And when you look out there, you realize this enormity of capital, the sea of capital that's out there looking for a home, looking for safety, looking for stability, looking for growth. and by golly, all wants to come to America, and all wants to come in America. They want to come to New York. Hard assets in New York, that's their goal. So I look at the city and I say to myself, hey, the city's doing pretty good. Do we have our taxes too high in our real estate? The answer is yes. Does it cost too much to build our buildings? The answer is also yes. Do we have to improve our infrastructure and so forth? The answer is obviously yes. Education, we need to focus on. Immigration, hugely important. But on balance, when you think of what we've got in this city, the quality of the educational institutions, their number, the fact that people at NYU, for example, we're attracting the best and the brightest from all over the world who, A, want to come to New York, B, they're coming to NYU, and from all corners, and from top-flight universities, no matter where they may be. But we're in a very attractive place and a very attractive time. So I look at this city and I say to myself, whatever we're doing pretty good. Should we need to improve upon it? Absolutely. But I think we can all take great pride in where we are and the quality of what we got as a platform to work with.
Let's use that to drill down now, get really specific on some things. And some of the largest development or redevelopment projects in New York City, if not the United States, are these guys on this panel, happening right in front of us, within blocks of here. For us to remain competitive in the global markets, we need new development. And we have significant challenges in this city going forward in terms of the regulatory environment. And you may not want to address this question, but I know some of you will, and specifically for union contract reform. Because to remain competitive, we're going to have a cost structure that allows that. How should these needed regulatory changes be addressed? How do we get non-union projects to be competitive? How do we get sites that don't have tax abatement, subsidization? How do we allow development to happen in the city and not be strangled and let other global cities take over our role? So our friend from SL Green, would you like to address that first?
Absolutely.
And then, Steve, for sure, you should invest it.
I'm going to leave the union question for Steve and others on this panel. But, the difficulties that we see in developing on a non-subsidized basis in the city are tremendous. There's very few sites where you can have a kind of a market break-even rent. In today's world, it's probably about $125 a foot to justify land and costs and carry and financing. And this isn't that kind of market for a lot of things you've heard today for big financial users to be airing it out with $125 a foot leases in scale. Boutique spaces you see quite frequently. There's a lot of strength in that mid-market, 10 to 15,000, 25,000 square foot boutique financial users, hedge funds, private equity, you can pay that. But gone are the European banks who are going to pay that, I believe, at least in the near term, and also for the domestic banks, that's not quite in vogue either. So, for us, we orient ourselves towards redevelopment, and I think that's as critical a question as development is. I know everyone likes to talk about new development because it's topical and the buildings are state of the art, but there's very little land left really in core Midtown. So you've either got to open up new frontiers in Midtown, or you've got to figure out ways to rationally reinvest in your existing stock. And we've taken the approach that we can't really build non-subsidized in the city for commercial. We're doing something with Pace downtown at 180 Broadway. We do retail in some of the major trade areas in town. But for commercial, we just find that we can go in very efficiently and redevelop our projects by buying buildings, full buildings at sometimes land cost. Buildings that are trading $300, $400, $500 a foot is essentially what a good site might trade for per FAR, and we get the building. So we go in and maybe you put another $100 a foot in, plus or minus, and you've got something brand new. My partner here, Mike Fascitelli in Vornado, we decided to team up on that approach at 280 Park. And while the cost base isn't going to be a whole hell of a lot less than it would be for a brand new building, it should be a world-class building on full redevelopment, and hopefully we'll be able to get top rents. But it's still going to come out at a much lower basis than if we had to start from scratch.
Steve, in terms of the question, I know this is a topic that you are interested in.
Well, I mean, you talk about that we need new development. I mean, typically development is a byproduct of the economy, and it's a question of job growth. And we're not seeing a lot of job growth, and therefore you don't see a lot of development because certainly it's a question of supply and demand. New York City is doing surprisingly well, and there is a certain amount of job growth, and people want to be here. But there's a reason for development that needs to occur for two reasons. There's an awful lot of obsolete buildings in New York with all the new technology. The percentages are very high of buildings that are over 50 years old that these corporations are occupying, and there's no room for consolidation where many of the major corporations in New York are spread out all over the city, and they're looking for a place to consolidate and take the advantages of what high-tech buildings can give them in affording them a cheaper cost and having less space per employee, as well as all the technological advantages that they need for doing business today. I mean, that's one of the reasons why I think we're very optimistic on the Hudson Yards, and Larry as well downtown with his development. But the corporations, I think, are showing a lot of interest in this because it gives them that opportunity that doesn't exist in most parts of the city. Now is a good time to develop because certainly construction costs are much lower. And the land costs that I know that we have are kind of built in because we're building a platform over the rail yard, so it's strictly building the land more or less than purchasing the land. But today the real problems lie with the cost of the unions. If you look over in the long term, looking past, the unions have really kind of won, if you will say that. The costs in New York are so high compared to anywhere else in this country. We can build the same building in Chicago with union labor at 50% of the cost of New York. If you go to New Jersey, it's 30% of the cost of what it would be in New York City. And the reason really is, it's not because the materials are any higher, because they're the same. It's really because of the union, and it's not the wages either, it's because of the work rules. And I think till we can really get change and reform in these work rules and working with the unions, it's going to be very hard to really compete with other parts of the country as these companies look about moving their corporate offices and consolidating. I think the opportunity is here. I think the unions are starting to recognize it. And one trend that's going on in New York City that is probably never really existed on such a large scale is the amount of non-union construction. I mean, the best thing that could happen to New York is that it became an open shop town. And I think this is what the unions are scared about. So I'm optimistic that we can get some change. I think there's some enlightened management there. There's some of the old unions that are holding out. And it's the employee, it's not the union workers, it's really the union leaders.
So Bill, I mean, you're doing the largest residential development in the city now in terms of for sale housing, I guess, in the West Village, the St. Vincent site. I should only one day be able to afford an apartment in your development. How are you seeing the regulatory environment either helping you get there, or you have a public-private partnership? Obviously, there was a very controversial project. You had to have some genius to get there through the system.
Well, you have to have definitely patience and fortitude. It's a complex process. But that also, on the other side, when you're done, it makes that product unique. But obviously, to find locations that are as of right is a much easier way to go. And we constantly look for that, or buy an existing building and renovate it that you heard about before. But the city is very, very complicated, and there are a lot of competing stakeholders who have legitimate views on development and growth and impact on the environment and transportation and education. And that's always been the way of this city. And in a perfect world, we'd like it to be a lot easier, yes, but I don't think you're going to see a significant change in pulling that back. Although, having said that, I think Mayor Bloomberg will go down in history. One of his great achievements was the significant change in zoning throughout the city, and we're the beneficiaries of that all over the place, whether it's Hudson Yards or in Brooklyn or in Queens. So I think there, as Larry said before, we've done a pretty good job so far, but can we do more? We have to be competitive. I think everybody agrees with that, not just on a national level, but on a global level. I mean, London and Tokyo and other capitals have their issues, but we have to maintain our competitive edge.
I guess just as for Mike and Bill Mack, just to talk more from an economic perspective, we've all been through a lot of cycles here, right, Mike? And here we're going to be in a situation where there can be substantial layoffs on Wall Street, in the thousands of people. A lot of it's been announced. Everyone's pretty bullish in New York City, but how is the global turmoil in the credit markets, the economic distress on Wall Street going to filter down to office rents, to residential occupancy? Are we kidding ourselves? Are we going to head back to a situation where there's turmoil in the markets again? Subleasing issues?
I'll let my eldest spaceman start.
Mike, you've been called on first. Go for it.
Go ahead. After you, Mike. Look, obviously, we were doing quite well in New York in the first half of the year. And, we have had a lot of stuff going on in the country and in the world. The Euro saga that plays out with Greece and Italy, the debt ceiling, and we still got another leg in that next week in terms of Congress. So it's certainly, the banking business has definitely been impacted probably as much or more than any industry what's going on. And I think they're cautious. They're having trouble earning the kind of returns they earned before. They've had a lot of legacy problems, and they're not in an acquisitive expansion mode. I think if you look at the numbers, actually, they haven't really shed many jobs. They were adding it in the first month, but there's certainly a perception. I mean, you see these announcements. It's not clear how many of these are coming in New York, but there's clearly a kind of we need the financial services industry. It's a very big part of the real estate market to be a healthy, thriving industry. And at the margin, they've basically been a little more cautious and pausing as we go into the second half of this year. I just think that's a fact of life. I think we have to, other industries have taken and done a great deal of expansion. NYU, healthcare, media, there's been a very good, healthy, robust demand. We could use more of it, but it's certainly not been driven by financial institutions. On the other hand, they're not vomiting out space or contracting, as you might read in the paper. So I think the headlines you have to be careful of. But the macro situation and micro is a headwind right now for the financial services firms.
Rob, may I just intrude on this one for a moment?
Sure.
Clearly, financial services are being pinched, and we feel that in New York. And we're going to continue to feel this, I'm sure, through 2012 until there's resolution of a whole range of things. What's happening in Europe obviously affects us here, and one leads to another. And so we'll have to get through this period with respect to financial services and the impact on employment that it has on us. And when you eliminate the bonuses that financial services are producing in this town, it becomes an issue that you can't help but
eliminating
focus on.
bonuses is not a good thing for a banker. It's
not at all. But I will tell you, I watched what happened to us at 7, in the leasing of 7. And it was amazing to me. About out of the 1,700,000 feet, about 850,000 is financial services. Moody's took 700,000 feet. Then there are one or two miscellaneous finance companies. But the bulk of the tenancies, and these are guys who came from Midtown, they're advertising companies, they're industrial. One came from Youngstown, Ohio, corporate headquarters here in New York. You have scientific companies, you have branding companies, you have law firms. Literally, you have the potpourri of diversity that came to 7. And I think one of the reasons they came, A, good value, B, terrific space. Steve, you said a few moments ago, and you're correct, and that is, I think 60% of the buildings are over 50 years of age in New York, right? So New York has a ton of antiquity in terms of space. And these tenants are looking for, among other things, good real estate, good buildings, good price. But they're also looking for good neighborhoods, and they're also looking for technology, and they're also looking for environmentally sensitive buildings. They're looking for green buildings. And we just had two of our tenants at 7 just signed the first green leases in New York, and that will increase with time. And I see the quality and the nature of the tenancies who are coming with respect to space, large blocks of space in towers 2, 3, and 4. And it amazes me. They're not financial, but they're in all these other sectors.
Bill, do you see that? Do you see that the impact of Wall Street being not? Larry seems a little bit bullish, but what impact do you see in your businesses? Because you have a range of businesses, both retail and also in New York City. Do you see an impact of the potential layoffs on cap rates, on sale prices, occupancy? I mean, should we fear anything here?
Let me address what you said. First of all, this is an election year in the United States, and we've got the first thing we probably should do in the next year is shoot all the politicians, because we're going to get very little done because of the political gridlock in this country. And everybody in this room should be championing a situation of trying to convince our politicians to govern from the middle, not to govern from the far right or govern from the far left. We're a country that is a centrist country, and unfortunately we've become polarized. Unfortunately, we've got an election year where the left is trying to use class warfare as an excuse or as a way to get elected, and the right is trying to do the opposite thing. New York is a world capital. Whatever happens in Washington, whatever happens in Europe, whatever happens in Asia affects us. You know, we're supported in a large part by how people perceive the economy, how people perceive New York, how many visitors want to come to New York, and as well how much people from out of this country and in this country want to invest in New York. So when you see something happen on Wall Street, when you see something happen in Europe, even though it might not have direct effect on the economy, the perception and the contagion with communication being instantaneous catches on. So I think that we have a situation in New York and in the country where the pendulum has swung too far in one direction. It happens in any kind of correction. And we are in danger of being overregulated in every form. That's not going to be good for capitalism, and if it's not good for capitalism, it's not going to be good for jobs, and it's not going to be good for jobs, it's not going to be good for New York. So I think it's up to each one of us to try to take an active role in trying to persuade the politicians that we know to come together and to govern from the middle. I'm not very optimistic about the next couple of years because of the election syndrome and because of other factors going on in the world.
Well, let's lighten up a little bit here because we're getting very serious.
Can I add one thing to this? But one thing that I think in a perverse way may not, with all the volatility, all the distress that started occurring in 08, and then recently we just talked about the financial firms and the euro, and all the shit show going on in D.C. has actually pervasively led to New York being a better place to invest. If you actually think about it, in a volatile, crazy world, if I told you that the U.S. Treasury is way lower than before it got downgraded, you wouldn't have believed that because it's a flight to safety. In our world, New York is perceived have weathered the storm extremely well and is a relatively safe, good place to invest. So in some ways, this volatility and this craziness, while the leasing market may have lost some steam, has actually driven down cap rates and bringing prices back to almost peak levels. So in a perverse way, what we went through has helped New York.
I want to expand on both of those.
Perverse will help in the short run.
Yeah, but what Mike is talking about is leadership, and I think we have a great mayor and we have a great governor, and they've shown tremendous leadership in a very, very complex and difficult world. And we stand out as a city that is stable, has dealt with their budget issues. You look in the paper today, the mayor of Detroit goes on TV in Detroit yesterday and literally pleads to his citizenry that unless certain things are done, reduce services, increase corporate taxes, Detroit's going to go bankrupt. They will run out of cash in the next 6 months. So we've been to that store. We've been to that play before, and a lot of people in this room probably weren't around in 1974 and 75, and then downtown in the early 1990s when there was 30 million feet of vacant space. And the reason why Larry's building is filled is because what Bill was talking about. The business community, the downtown community, got together and worked with the mayor, Mayor Giuliani, and all the people, the stakeholders, to come up with a revitalization plan, and it worked. And we're all beneficiaries of that hard work. It took a long time, but downtown now has 50,000 people living there. It has over 300 new tenants since 9/11, and those are the type of things that Bill is talking about. Advocate for what is good for New York City. Advocate for job creation, because then all of our projects, wherever they are, will get filled, whether it's on the residential or commercial or retail side.
Mark, let me just make one point. We are doing better because we have a great mayor and we have a great governor, and they're doing the right things. But without the world and without Washington, we can't be successful in the long run.
Mark, you have some strong views in this, I know, so why don't you?
Well, I got to be a little bit of a champion here because we only deal in one market. That's New York. So I'm very bullish, actually, in terms of the year we had.
What market is that?
What's that?
What market's that?
I don't know. It's anything that moves in Midtown. Anything that moves. That's it, exactly. But I mean, there's a lot of problems. The problems have been kind of well enunciated on the panel. But I don't want people walking away not realizing a lot of the good things that have happened since the trough in 08, when I think we were all up here, and I guess it was November of 08, and it was a pretty somber mood at that point. 86,000 jobs have been created, private sector jobs in New York City since the trough in 2009. The vacancy rate, which gapped out to about 13.5%, 14%, stands at 9% today. Wall Street, for all its troubles, is going to make projected $20 billion, which will put it on track for a top 5 or 6 performance of all time. Most of that in the first half, but at least 40% of that in the second half. The jobs front, in terms of loss of jobs, on the financial front, we've seen some, not many. We have a lot of expanding tenants in this portfolio. So there is some stimulus out there, that people are making money. I think Barry said it on the last panel. Companies are pretty lean right now. They've just come through a period where they've shed a lot of overhead. They've gotten space lean, and now I would say at least 5 out of every 10 tenants we renew are renewing, expanding. 3 are probably just renewing, and 1 or 2 shrinking. And those are all sorts of industries that were mentioned earlier, I think, by Mike. We have the same sort of experience, but this was a very good year. I mean, the capital is cheap. The opportunities are plentiful. Our job, I view my job, is to go out there and basically try and, make the best of the hand, we have that we've been dealt, and try and figure out how to asset allocate within this market, and try and take profits as a hedge against, what may occur, but also stay long with projects that we think have long-term upside. And this year was actually a very good year in that regard. It's not reflected necessarily in the stock market and stock price, but if I rate the past 15 years or so of doing this kind of business in Manhattan, I have to put this at sort of top 5.
I'm going to go down the panel pretty quickly here, because this reminds me a little bit of last year. We began being bullish about New York City, And I asked a direct question. There's a lot of young people, young professionals in this audience, and I asked the panel last year, if you remember, if you're going to start a career, where should you start it? I'm talking about globally. And there's a significant disconnect between the various panelists and what that should be. So I'm just going to go quickly down the line. It's your son, it's your daughter. You're recommending where they should start their career. We all know it's impossible to get a job on Wall Street now. There's 3,000 applicants for 60 jobs. I mean, it's a ridiculous situation. That dream is over for most people. But if you're recommending to your son, your daughter, where would you go globally and what you would do in the real estate world, just quickly, Mike, what would you tell them?
I'd like to get them as far away as possible.
Okay.
China.
And would it be real estate? So far away as possible and something else. That's Mike too.
I'm going to stick with my answer from last year or 2 years ago, right sitting here in central New York. I don't, there's no other place that I could see at the moment where I'd want to be. So,
Bill, you were controversial last year.
No, I just returned from a few weeks from Southeast Asia. What's going on there is miraculous. That's where the growth is in the world. Yeah, you can pick a small place like New York, and some of the major capitals are going to continue to be good. But the real growth in the world today is in Southeast Asia. I was in Singapore, I was in China, I was in Hong Kong, and I was in Korea, which was a modern-day miracle. Each of them have slightly different kinds of government. Some completely planned, some semi-planned, some semi-democracy. But that's where the opportunity is, and you can have that opportunity and source that opportunity by being an entrepreneur in New York as well, because the world is global today. But if you look at where you would expect that the customers are coming from, and are going to be at Southeast Asia. Now, a lot, one of the advantages of New York, and I'll just say that, is there's a half a dozen cities that the Southeast Asians, including the Chinese, are going to invest in and are going to put their money in, and all over the world, and New York is one of them. It's probably...
It sounds like, according to Bill, you should work in New York but have an office in Flushing or Chinatown.
That's okay.
Great combination.
Nothing wrong with that, but I will tell you, if you look at if you look at where they're going to be coming, they're going to be going to Vancouver, Toronto, New York, Los Angeles, San Francisco, and London.
Steve, what do you think? Where would you recommend people locate, other than working on your project?
Well, if you're looking for quality of life, you're certainly going to say the United States. And if you're a young person and the type of interests you have are located in New York, where most things are, certainly New York offers a lot of opportunity. I mean, if it was my daughter, I'd call one of these guys on the panel and get her a job.
Well, your banker.
She's hired.
I don't believe in nepotism, so I don't want her working for me. But I think, right now I think there's a certain malaise in the United States, and we're not growing, but I'm optimistic. I think that we'll make the right decision and get on a path of growth and reverse the course that we're on right now in next November. And I think the United States certainly has the resources, the corporations have the capital, and I think the people have the will. And I think we have to just get off of some of the things that are going on today and look to the future and make those changes that need to be made.
Well, my kids have already made their decision. Michael is just about to graduate from the NYU Master's Program and is working for us. And my daughter's been working for us for 5 years and been involved in our project on 130 West 12th Street.
And Michael made the choice. It could have been Aspen and working for you. He must have been deranged.
Well, they have their own thought process, and they came to the conclusion that this was the best opportunity for them. And I believe a lot of their friends who they went to college with are here in New York City, and they voted with their feet here in New York City.
Larry?
We have feet on the ground in Warsaw. We have feet on the ground in China. We're seeing a lot of things happening in different parts of the world. But I have to tell you, never sell New York short. This is the place to be at the end of the day. So, the things that we're doing excite the hell out of me. I think there's tremendous opportunities for tomorrow. You never know when another piece of land is going to surface. We just found ourselves a piece can support 1,000 units of housing, $125 a square foot. Nothing wrong with the rental housing for that site. Things come up all the time, and you just have to be here and be sensitive and ready to go. My attitude to young people is, New York is the place. Have courage, have faith. There's no time like the present, because there are always people around who will tell you 4,000 reasons not to do something because the climate will be better tomorrow. I say, take the advantage of it today, start small, buy small, acquire, and improve, and grow the asset. And one successful deal will lead to a second, lead to a third, lead to a fourth. I think no better place in the world than the city of New York, and now is the time.
So just change the topic a little bit, and this goes to demand drivers and growth. You know, we tried to get a keynote. It was actually this ridiculous topic of this conference I sort of invented with the hope of somehow making the connection between social media and real estate. And it was during, I figured if the social media could bring down Egypt or change regimes globally, social media must have some sort of impact on real estate. So the question to the panel, I'll be glad for someone to volunteer this, Mike, or someone else. Do you use social media in your business? Will social media have an impact in your business? I'm talking about Twitter, Facebook, emailing in general, but more importantly, even tenancy. I mean, I had a discussion with others recently, some fellow from Jamestown at the ULI, and it was interesting, and he viewed social media as an occupant, i.e. Google taking over, 3 million square feet in Manhattan. That generation wanting to be in the cities, they don't want to be in the suburbs, they want to be near services. So both the use of social media in your marketing, as well as social media as a potential driver of the economy for New York City. Do you want to?
The answer is yes. I mean, I think that everyone is using more and more of it, or else you're going to be a dinosaur, whether it's even sustainability, which we haven't talked about, and being green, which is, and a lot of people, whether it's leasing space, the websites, our website gets, so many hits, and the way we market, I'm on the board of Toys R Us, and if you saw what's going on with the internet and what's going on in retail with social media and advertising and emailing and targeting, it's mind-blowing. It's mind-blowing. It's happening so fast. So I think, in advertising and marketing, even in real estate, which is a hard ass of business, all that delivery, ability to do graphics, presentation, absolutely, we're using it left and right. One of the things I think about young kids, and I said China for a reason, or San Francisco would be another. I think New York's a great place to live. It's a great place to make a lot of money. All of us have done that, coming from all over. But it's great to see what's going on as a young kid around the world. Like my kid could spend 2 years in the Silicon Valley and learn what's going on in technology. He'd have a huge perspective that I don't have the benefit of doing. Same thing when I said China. The ability to learn what's going on in the world and how it would impact us here is startling. I think the technology changes are unbelievable, and they're moving unbelievably quickly.
I think if you ask people in the media technology world, what's the biggest inhibitor to growth, is the lack of qualified engineers. And Google, this is the largest, outside of California, the largest office, and they grab a lot of these engineers. So what the mayor is doing with his college.
You sound like Rick Perry. You want help?
Yeah, no. The RFP to get universities literally from around the world to come in and open an engineering school is critical. That is the future of this city, and the fact that Stanford, is seriously looking at it, and Cornell and all these other universities from Israel, from all over the world, is a testament to the power of our city, and it's critical for our growth.
Anyone would take a stab of using technology and social media either as a driver of your growth or using it in your business?
Rob, I can tell you that we're involved in 485 units. We're going to the ground in December in the Magic Kingdom in Orlando, Florida, with a Four Seasons Hotel. We're going to be building another Four Seasons Hotel down at the Trade Center, 186 units. Probably going to the ground with that one sometime in 2013.
Dune Capital from this morning is their partner.
Okay, good. But what we learn from Four Seasons is that 80% of their bookings come through the net, come through the internet, and the effect by the social media on their product is extraordinary. And so I think more and more people are beginning to recognize the importance of addressing issues and understanding the use of social media, because increasingly I think it's going to have a major effect on everything we do in terms of our business and our lives. So I think it's part of us and needs to be.
I don't think this is the actually focus group you'd get to ask about.
No,
internet
absolutely not.
technology.
But I figured if you, I don't know about it. I figured if you guys knew about it, you would.
Rob, you understand that
I'm not admitting my
several
age.
of us have these old phones.
Exactly,
so not,
exactly.
Blackberries.
Hey, you and I came up with that question. It's a good one.
Rob,
Listen,
let me make one point.
I'm not as old as they are, guys. Almost.
And the point is this. I think that every young man and young woman who graduates today, if they can, they want to come to New York. They perceive the opportunities here. And how we handle this intellectual capital is going to determine how successful we are. That's short.
Okay, very good.
First time.
I ask this question every year, and the question is, what keeps you up or awake at night? For me, it's anything that bothers me the day before. I just, gets in my mind, it rolls around, I wake up at 2 o'clock and I sort of stay up for a while. But what keeps you all up at night regarding business? I mean, what is that thing out there that you can't figure out? What keeps you awake at night? We'll just go down the line here, and let's start with you, Mike. What keeps you awake at night?
I have to, nothing keeps me awake at night.
That's great.
I mean, yeah, I wish there was something keeping me awake at night, actually. I mean, it was, look, part of
How
our
did you mean
job,
that?
Part of our job is to deal with the unforeseen, and you can sit all day going to work, and then, as Larry said, something comes up, an opportunity, a problem. We spend a lot of time dealing with that. I think if I had one worry, I think Bill Mack hit it. We all came from a country which is, kind of was proud of success and working hard and achievement, coming from nothing, coming from wherever you came from, and working together. And we've got a little bit of class warfare going on like I've never seen in the country, and a political system that's right now, I think, broke. So if I worry that we don't get our act together, we keep punting this down the road, someone's going to pay for it eventually. This is not a free lunch. So if I have a long-term worry, that's it.
I think I have two worries. Maybe I worry too much, but I think about the mayoral elections in 2013. That's a big deal. So we've talked very globally about the eyes, but it's all going to come down to we've enjoyed an administration that's been fairly business friendly and for the past almost 12 years, and there's going to be a change. And so change you have to think about, be concerned about, hope it's going to be positive change. And at the moment, there's no clarity or transparency on what that's going to end up being. And we've lived through administrations that haven't been so good and weren't so business friendly. We've seen what that's like, and it's a big deal, and it's coming not too distant future. So certainly look at that. And I think the euro debt crisis is, we don't feel it here. In 2008 we had the problem here, not so much in Europe. Now it's kind of inverted itself. It's different, but we're used to seeing emerging markets, hit the wall and have to restructure the debt. We're not used to seeing westernized, established economies go upside down on their sovereign debt, and seeing these kinds of well-established economies paying 7% plus interest rates. So I don't know that anybody knows where that ends. There's no precedent. We haven't been to that show before, at least I haven't. So it'll be interesting to see how that rights itself. And there's scenarios where that could help the U.S. and help New York and take our leadership as one of the financial capitals of the world even higher, and that was alluded to, or there could be some really some really unknown and bad ripple effects. So I think watching that play out is something that we stay focused on and gives us a level of pause.
Bill, what keeps you up awake at night?
I'm glad you asked me what keeps me up, because the last 5 nights I've been sleeping pretty well. Coming back from Asia, it was a difficult translation. Look, the world's in an upheaval today. Politically, economically, things move very, very quickly. We went through the Arab Spring, and don't underestimate the impact in the world of 1.5 billion Muslims and how their world is going to work out, and we hope things will work out successfully. Don't underestimate the problems that the Western world has in too much indulgence and spending too much over a long period of time, and how we straighten out our budgets. Don't underestimate the problems in the emerging world and in Southeast Asia as they have growing pains. And you put all these 3 things together and overlay that with instantaneous communication, and you kind of scratch your head and wonder how it's going to work out. Believe it or not, I'm an optimist, and I think we'll eventually get through it. But there are a lot of cross currents in the world. There are a lot of political and economic problems like I've never seen in my career. And we all have to try to work through them, and work through them we will in time.
Steve, what keeps you awake at night other than
First thing that
leasing
keeps
the
me
West
awake
Side
at night
yards?
is how do I get a win on Sunday in a football game? Then when I get done with that.
Did you sleep last night?
I take my Ambien before I go to bed so I can get to sleep is what it really takes. Because when I think, you think about the direction of this country and the city, and then, what we can do to get it back, and what I specifically can do to be involved in making it a better place. And today, that can keep you awake for a lot of hours. So I find when I really start, or I wake up thinking that, Ambien is the best thing to choose. So.
I think Washington and what's going on in terms of the budget deficit and tax, looking forward to the issues in terms of taxes and how we balance our budget keep me up.
Well, what keeps me up at night is the reality of being 80 years of age. All kinds of things happen to you, and it's just the reality of life. Several times during the night for miscellaneous causes. But other than that, what I find terribly disturbing, and I think everybody's reflected on this tonight, or this afternoon rather, is that we just had a pipeline issue delayed because our political leaders decided to kick the can down the road until after the elections, which means a multi-billion-dollar project is just going to be stalled until after the elections, so that both sides, Republicans and Democrats, can avoid the issue until after the elections. I looked at that and I said to myself, considering where we are in this world, especially in America, what our needs are for jobs, what our needs are for stimulus, what our needs are for growth, how do we possibly, in good conscience, serve the American people by kicking the can down the road on something that is so important to us and cause a delay of at least 14 to 15 months before it could be reconsidered? In the meantime, the Canadians are furious with us because instead of selling the oil to America, they're going to sell it abroad. They're going to sell it to China, sell it to Japan. So I look at these things and I say to myself, when you think about our political leadership, their commitment is to Americans. Their commitment's to us. And what I really see is a commitment to themselves, their interest, their total self-interest in getting reelected. And I find appalling. That's what keeps me up at night more than anything else.
So we have this panel. We're almost over here, but I asked the same question in an earlier panel with a bunch of youngsters who actually know about social technology, right? But optimistic, pessimistic, or just like shutting down. I mean, where do you see, truthful, I mean, where do you see the 2012 in terms of your vision of the world? Just quickly, optimistic, neutral, or pessimistic? Mike?
Optimistic.
Same.
Neutral plus.
His
Steve?
neutral is optimistic.
That's
For him
that's
to
true.
say.
That was very positive.
I mean, I think, it's an election year, so I think that you won't see a lot of great things happening one way or the other. So I think it's, pretty neutral for 2012.
Optimistic.
For New York, tremendously bullish.
If you don't say you're optimistic, we're in deep shit.
Larry, I didn't hear. Say that again.
Listen,
Come
I
on,
want,
Larry, you could give us a little bit of more optimism.
anyway, listen, thank you so much. It was a pleasure for me to do this. Great panel.
I just want to thank once again all our speakers and our four chairmen, and we'll see you next year. Thank you very much.